Hey there YouTube family, welcome back. I hope you're all doing fantastic today. In this video, we're diving deep into the world of passive income through dividend investing. You might have heard about it, but today we're going to explore 5 fascinating facts you probably didn't know about this incredible way to build wealth. So grab your notepads, hit that subscribe button if you haven't already, and let's get started. Fact number 1, and this one's a biggie. Dividend investing has been around for centuries. Yep, you heard me right. This isn't some new-fangled get-rich-quick scheme. It's a tried and true strategy. The first recorded dividend payment dates back to the 16th century when the Dutch East India Company distributed profits to its shareholders. It's a practice that has stood the test of time, providing investors with income through good times and bad. So when you invest in dividend stocks, you're participating in a tradition that has been going strong for centuries. Alright, fact number 2, dividend aristocrats. These aren't kings and queens, but they might as well be in the world of investing. Dividend aristocrats are a select group of companies that have not only paid dividends consistently for at least 25 years, but have also increased those payments annually. These companies are like the gold standard of dividend investing. They're not just giving you income, they're growing it year after year. Think companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble. Investing in dividend aristocrats can be a rock-solid way to build your passive income over time. Now, let's move on to fact number 3, DRIP investing. DRIP stands for Dividend Reinvestment Plan, and it's a game changer for long-term investors. When you enroll in a DRIP, instead of receiving your dividend payments in cash, they're automatically reinvested in more shares of the same company. This means you're buying more stock without spending a dime of your own money. Over time, this compounding effect can turbocharge your wealth growth. Imagine a snowball rolling down a hill, getting bigger and faster with each revolution. That's what DRIP investing can do for your passive income portfolio. Fact number 4 is all about taxes, and it's good news. In many countries, dividend income receives preferential tax treatment. In the United States, for example, qualified dividends are taxed at a lower rate than ordinary income. This means you get to keep more of your hard-earned money. Plus, some countries offer tax credits and incentives for dividend investors. It's like the government is saying, thank you for investing in our companies and helping to stimulate economic growth. So, not only does that dividend income provide you with cash flow, but it's also tax efficient. A win-win. Last, but certainly not least, let's talk about fact number 5. Diversification through dividend exchange traded funds, or ETFs. If you're new to investing or simply want to spread your risk, dividend ETFs are your best friend. These funds bundle together a collection of dividend-paying stocks from various sectors and industries. By investing in a dividend ETF, you're instantly diversified across a range of companies, reducing the risk associated with individual stocks. Plus, they're incredibly easy to buy and sell, making them a convenient choice for passive income seekers. There you have it, folks. 5 facts you probably didn't know about passive income through dividend investing. From its rich history to the power of dividend aristocrats, the magic of DRIP investing, the tax advantages, and the diversification offered by dividend ETFs. Dividend investing is a powerful strategy to build wealth over time. Remember, while passive income is fantastic,